All right, guys, back to work. Back to work. Boy, what a fantastic day. What a fun day to be a trader here today. We finally got that squeeze. I think most of us have been waiting for the past, it seems like, forever now. And, it wasn't the perfect double bottom, but, boy, I know a lot of you guys made some pretty good money on that two-try failure, that double bottom reversal this afternoon. So, well done on that. But now, back to work. We got some more trades to find tomorrow. There are two really important clues on the chart tonight that are kind of tipping us off to where the big money is likely made for tomorrow. So I'm going to cover those two clues, and most importantly, we do in these videos, I'll go over my favorite trades for tomorrow. That way you have a game plan to make some money on Thursday. Now, we have a lot to cover in the video tonight. Before we jump in, though, and get our hands dirty on the charts, make sure you subscribe. I don't want you to miss tomorrow night's video, so make sure you subscribe to the channel. And then if you like these videos, if you like these lessons, do me a favor tonight. Hit that like button here on the video. Give me a shout out. Give me a holler down in the comment section, if you will. Either way, thank you so much for tuning in, supporting the channel, watching the video tonight. But enough of the intro, though. Let's get ready for Thursday. End of the month, end of the quarter. We talked about more volatility. We got that volatility back here today. Now, let's start first here tonight on the 60 minutes. The Nasdaq and the triple Qs. I get the Emini and the SPY. In my trade room, I like to use the 60-minute charts to help me plan my trades each day. And then later on in the video tonight, we'll drill down to some faster time frames, some tick charts. Tick charts make the entry timing a whole lot easier. So we have a lot to cover. We'll start with the big picture first, and we'll zoom down and talk entry tactics as we go deeper into the lesson here tonight on the 60-minute. What are the 60-minute charts telling us? Well, first of all, we know we're bearish overall right now. We're definitely very bearish, and we have this really big overextended move at this point. We've been going lower ever since Jay Powell spoke at the FOMC last Wednesday into Thursday. At this point in the game, we are ultimately looking for one of two scenarios: either a two-legged correction and a retest of that low, right? In other words, to give the sellers some meat on the bone and allow them to sell high. So a two-legged correction. We'll talk about that as we go deeper into the video tonight. And we have to be thinking we've got Jerome Powell on the microphone tomorrow afternoon, and we've got this one really important clue on the charts tonight that are telling us that we probably should expect a range here. Now you guys know me. I love range-bound markets. Ranges allow us to sell high, buy low, sell high, buy low. So definitely looking forward to a trading range tomorrow. Hopefully we'll get a range tomorrow because those tend to be pretty easy ways to make money. We'll talk about the possible range scenario. These can be tricky if you're not familiar with the right strategy. So we'll talk about ranges. We'll talk about two-legged pullbacks. And by the end of the lesson tonight, you will have a clear roadmap to make money on no matter what the market throws at us on what might be a very busy day tomorrow morning in our trade room. Now, before we jump into the tick charts, before we drill down and talk about entry tactics in these two scenarios I've outlined here tonight, let's double check the calendar because there's quite a bit going on here the next 24 hours. Now, remember, we're going into the end of the month, end of the quarter, so we do expect to see more volatility over the next couple of days. We saw a taste of that here today as well. There are three things, though, that we want to be kind of keeping on our radar for tomorrow. One is the GDP report at 8:30 Eastern Time. You don't need to be a very experienced trader to know that GDP report will be a big news report tomorrow. I always love to see news early in the session, kind of get the juices flowing tomorrow. Later on in the day, you got to scroll down a little bit. Jay Powell is waiting down there. Now, this is not his testimony. A couple times a year he'll testify on Capitol Hill. This is a roundtable discussion that he's a member of. But the last couple days we've heard a lot from different Fed speakers. We'll hear from Goolsbee tomorrow morning too. Everyone seems to be saying to expect a few more rate hikes, and I'm sure that was probably why the markets were so soft continuing this week. So we know that whenever Jay Powell speaks, he's the head of the Fed here in the U.S. We know the markets are listening. That seems to be a very big wild card, a known unknown for tomorrow. So we'll see what he says tomorrow afternoon. And then have you been hearing about this drama of the government shutdown? All the we'll see if this gets put together. They've only got a couple days left to put the deal together, so we'll see if the crooks on Capitol Hill can figure out a way to avoid a government shutdown. That is definitely something that we're watching the next few days, and that is certainly something that we'll keep an eye on tomorrow in our trade room. So GDP tomorrow 8:30, J-Pow at 4 o'clock. That's a big wild card tomorrow. And we'll see how much this drama. We heard from Moody's right on Monday talking about if there's another government shutdown, they're going to cut our ratings. So that's definitely a lot of drama around that government shutdown. Now back to our charts, right? The money is made on the charts, though, right? So let's go over my favorite trades here for tomorrow. I'll start off first, of course, on the E-mini and the SPY. We'll wrap it up tonight, don't you worry, on the Nasdaq and the triple Qs. Keep in mind, pretty much everything is interchangeable right now. They're almost the exact same market. So everything we talk about on the S&P and SPY can be applied to NASDAQ and vice versa. In the introduction, we talked about two scenarios, right? Bear market looking for a two-legged correction and a retest of that low. That is a likely scenario here for tomorrow, as well as that trading range. And we are hoping we get that range scenario because those are, in my eyes, much easier to trade, especially if you've taken my free classes. You know how much I love ranges. Let's now drill down to our tick charts. Remember, tick charts make everything easier, in my opinion, especially entries and trade management. This is a 7,000 tick chart, upper left-hand corner, and that, of course, is the 21 EMA, in case you're watching for the first time. There are two very important clues right now on this tick chart. The first one is the strong moves in both directions. Now, in my video classes, in our trade room, we talk about anytime we see strong moves in both directions, right? Strong move down, followed by strong move right up. Usually strong moves are going to want to retest, right? And so when you see strong moves in both directions, it just means usually there's a range coming the following day. And that would make sense because we have J-Pow tomorrow afternoon. So I really want to dial in the game plan for ranges tomorrow. We'll talk a lot about ranges here tonight as we go. That is one of the most important clues on the chart. So strong moves in both directions. Usually there's a range coming the following day. The second thing is a V bottom, right? That kind of V bottom squeeze. And the reason why this is so important is because anytime we see a real strong reversal off the low like this, we know on the 60-minute we are still susceptible to that two-legged correction, right? So we know there's potential right now for this momentum to continue and run higher. Now, why is it important? Well, there's probably money to make on the way higher, but at the same time, though, you probably can guess who's waiting up there, right? It's an overall bear market. You have to think there are going to be a lot of sellers to short this thing back down again. This can be difficult to pick those tops when you have this rotation off the low like this. So we'll talk about a couple patterns to short this thing, right, as it goes higher as well. So we have a lot to cover in a very important video. Let's jump right into it. Now, the scenario that you want to be thinking about right now is we go up, we pull back, we retest, and back down. Okay, we go up with that momentum rotating higher. We go up. We'll talk about long trades on the way up. I love the idea of the short off the high. And then really at this point, we'll look for, do we collapse back down in? We'll put a game plan together for that. Do we retest the high? I think it's easy to look for a double top reversal off that high. But this is the scenario that you want to be ready for here tomorrow. And then again, we'll kind of think about if it breaks down, right, and runs lower from there. And again, later on in the lesson tonight, we'll talk about ranges here as well as we go deeper into the video. Now, as we go higher, what's my concern? My concern is bears, right? We're an overall bear market right now. So as we go higher, I'm worried about buying high, right? I want to buy as low as I can. And as you guys learn in our free trading classes, there is one specific entry tactic we use to make sure we buy as low as we can. And those are trap patterns. In this case, it would be a bear trap. This is a very simple setup, right? Strong run up, it's a higher high in price, and a trap, right? It's a strong run up, a higher high in price, and a trap, right? We see a lot of these in all different time frames. So as we're going higher, it's traps. on the way going higher. Now, once we start getting up around key areas of resistance up here, now we don't want to be what? We don't want to be buying high up there. This is where we expect who to come in? Yeah, sellers, right? It's an overall bear market. This could be that big two-legged correction I was talking about on the 60-minute chart. Now, what's the problem being a buyer? What's the problem being a seller up there? The problem is momentum. That's a lot of momentum, and for all I know, it's going to keep on going higher. So in order for me to pick a top like this, I like to use, well, in my free classes, I talk about a pattern called a failure pattern and a trap pattern. If you blend those two together, you get what's called a crown reversal. It's a very simple pattern. We're anticipating a lot of bears up here, so I like the idea of selling, but a lot of momentum for the buyers right now. Let's see if we can trap those buyers in. Let them try once. Let them try twice. Notice that lower low in price, right? Buyers once, buyers twice, and look for that juicy signal coming off of that high. Now look at how that pattern sets up. You can see one sitting right there, right? We go up, buyers once, buyers twice, and that trap right off the high. So that will trap right there, right up. 1, 2, trap, back down. These can be very lucrative reversal patterns. I call these crown reversal patterns. And again, those will wrap together a failure and a trap setup on the way down. Now, if you're watching for the first time right now, this may be very confusing. You may not know what a trap is and a failure pattern is. You may not know any of this stuff if you're tuning in for the first time right now. So not to worry, I teach all these pattern setups and a hell of a lot more in our free trading classes. What I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link that popped up there and take that strategy or learn that strategy, because the strategy I teach in that short video series will teach you a remarkably simple trick we use every morning in our morning trade room, members trade room, to know exactly where the best winning trades are going to be that day. I'll teach you 4 of my favorite entry patterns. You will learn about traps, failures, crown reversals. If you're not making consistent money right now, if you're tired of missing the best trades each day, take that free course. It is perfect for someone trying to make the jump into full-time trading. And also be aware too, if you can't grab that link that popped up there, I'll put all the important links tonight along with my Twitter handle and things you can find more information on us down in the description of the YouTube videos in case you want more on that. All right, so grab that link, take that free course. You will love it. You will love it. I get so many good feedback on those free classes. So again, we know the overall game plan, right? As we're going higher, we're buying low, we're buying traps. As we run up, right, we then trap those buyers in, crown, reversal, and we look for that short back down in. Now, there's a good chance with all of that strength from the buyers, there's a good chance this thing holds and runs back up to retest that high. There'll probably be a channel off these highs, right, off of this low. So we got to be careful in this area. All right. In a moment, I'm going to talk about how to know whether or not you should buy it or whether you should sell it. All right. We're going to cover that here because this will be a key point here for both sides of the market. In last night's video, I talked about what's called a two-legged pullback. Right. Remember that from last night? Imagine one leg, imagine 2 legs. It's a little bit more than a measured move. A little bit more than a 100%. That'll give you an idea of where to look for the entry. Right. Now, remember, we're an overall bear market. I have to respect those sellers. So if I want to be a buyer here, what I got to do is I have to wait for those bears to try to take it lower and ultimately use their stops to fuel the move back higher. And to do that, I'm going to use what I call a 2-try failure pattern. We talk a lot about failure patterns in our free trading class. This is a slight variation of it. It's a 2-try failure because, again, we're overall bearish. I want to give the sellers the benefit of the doubt. But like all of my trades, almost all of my trades in our trade room and our free classes, we talk about this. We like to run the stops, right? In my eyes, that's the easiest way to make consistent money is to get in, buy low, trap, in this case, the sellers on the wrong side of the market, right? And run them back up to retest that high. All right, so that is the idea behind that pullback, that 2-legged pullback, right? That trapping in the bears as they try to run it lower, right? Okay, and then back up to retest that high. Now, we may see the bears may come up and they may blast, and we may start running back down into that trading range. If we make that run up, we get that crown reversal and it just pops and begins to grind down like this. Okay, that grinding motion to it, that's the giveaway. All right, so again, if we simply pop down, no giveaway yet. Bears try once, bears try twice, back up to retest the high. And then in a moment, I'm going to talk about how to short this thing back down again, because you guys know me. I love double tops. I love double bottoms. We talked about that last night on the video. So we'll talk about that here in a moment. But again, if they pop down like this, it's not enough, right, to hold it and keep on going, right? If they hold it and keep on going, where do we think the market wants to go? It wants to start taking out some of these big lows down here. And when it does that, when it starts to pop and grind down now, all we do is we grab a trend line off that low. Now watch closely. We mark off the low. We put it up around the high. See how that creates a channel, right? It's like this one over here. We pop off the high, bring down to that low, right? See, buyers want to buy right there. Same idea. It's just we draw off the low and we draw up around the high. Now, what I'll do is I'll go out, look left, and just like back here, you want to find those swings, right? Find swings right there. And look for really any of the entry patterns, right? I love traps. You guys know if you've taken my free classes, I love traps. It could be a trap, like I'm showing you here. It could be a failure. It could be a pullback combination. So any of those entries off of that. But that's how you're going to know as it drops off that high. That's how you'll know whether or not it's a drop, bears once, bears twice, back up, right? Higher highs on price, or does it end up being lower lows? And we'll give you that idea here whether you want to short that or buy it. All right, guys. Now, in a moment, I'm going to talk about ranges again, because ranges are probably the easiest way to make money today. So we'll talk about that in a moment. But one more thing here, though. If we end up running up, we get that two-legged pullback, we retest the high now, right? We retest the high. Okay, who is trading up here? Who's trading up there? Are those? Now think about it, right? Professional buyers, experienced buyers are going to buy that dip, right? They're going to buy that dip that we talked about before, find that channel, right? They'll buy that dip off that low. So the smart money, the experienced traders are getting in nice and low. Where do you think those buyers are taking profit? Probably back around those highs, right? So is it safe to say that the professional buyers, the smart money, are going to become sellers at the high up there? Right? They'll be selling their way out, at least a big chunk of that position at those highs. Okay, so who was actually buying up there? Rookies, right? Inexperienced traders who didn't have the guts to buy the deep pullback. They just weren't paying attention, or they didn't have the guts to do it, right? So like I used to do when I was a new trader, I would be scared out of buying the dip, and then once it was running without me, what I would do is I would buy that next pullback, right? I go, oh, this is good enough, I'll buy right there. Yeah, well, no surprise, I lost money the first couple of years of my career not buying low, buying high. It sounds easy to avoid, but we all know in the heat of the battle, right, while it's happening, with the FOMO pumping through your veins, it's very easy to get trapped right into that. And that trap is exactly what we want to see here as we pull back. Let's trap those rookies in. Now remember, right, we are at this point very bullish, right, in this scenario. So we're not trying to pick a top, right? One thing about me, I don't pick tops and bottoms. I wait to, like I said earlier, I wait to get a situation where I can use the stops as fuel to run this thing back in the opposite direction. This would be a two-try failure. And then where does the market want to go? It'll definitely want to go take out that low. Half off here, leave a runner, quarter off, right? Quarter off as we roll. All right, guys? So hopefully by now, we got a pretty good game plan here, right? In what could potentially happen for tomorrow, right? That run up with those traps, that crown reversal, that two-legged pullback. Do we keep going, right? Do we trap in back up to retest? And then do we get that beautiful, again, like we saw today, it was a double bottom. It wasn't a perfect, right, double bottom, but once you take out that low, right, it's 1, 2, back up, right? It's 1, 2, back up. It's 1, 2, back up. Some of these times it takes a couple swings to get that signal, and sure enough, everybody, once those bears tried twice, right, it just squeezed. I know a lot of you guys made some money on that this afternoon. So same idea, but on the short side here for tomorrow. Now, here is the $1,000 question here for tomorrow. What do we do if it goes ranging? Okay, that's a big one. And also, too, what if it just takes off to the downside, right? I mean, these are bear markets overall right now, right? What if it just takes off to the downside right now? How could I trade that? If we don't get any of this momentum continuing, I can easily see what might happen. It's a bear market overall. This is the strongest pulse we've seen from the buyers in weeks, right? So who knows, right? It may not continue. Over on the Nasdaq right now, Nasdaq is in a very familiar situation. We are bearish. We are I don't like the word oversold, but you can definitely tell we are way extended down. We've yet to get any meaningful pullback ever since the FOMC. So again, we have to think a two-legged correction is on our radar, and we know how to trade that, right? We know as it goes higher, we want what pattern again? Bear traps, right? Bear traps, bear traps, bear traps. I've got probably 100 examples of bear traps in my free trading classes, so you guys should know what those look like going higher. But let's talk about ranges, right? Let's talk about ranges, because that was one scenario tomorrow. I think we'd be foolish for not anticipating here on both of these markets. Now, the NASDAQ has the same stuff, right? Same stuff. We have strong moves in both directions, right? Strong move down, strong move going higher, right? So that, again, whenever you see two moves like that in both directions, usually, the market's a bit confused. Neither side of the market is holding control. Usually that means a range is coming. It makes sense tomorrow with Powell in the afternoon. The V bottom off the low gives all that momentum to the buyers, which means if I do want to sell up here, I got to be careful, right? Don't step in front of those freight trains, trap those buyers in, right? And get those shorts back down again. And then also, too, a third clue on this one is this trading range. We went into a trading range pretty quickly this morning on the NASDAQ. This is what you call rotation off the low. So we're kind of rotating off that low. If you're a member of my trade room, if you've taken my free classes, these rotations can be very, very aggressive. Now, this is the bear market overall, so you could definitely see there were still plenty of bears who were waiting to short this thing at that high. So, but that's definitely a more bullish clue than bearish clue right now. Okay, let's talk about ranges. Let's talk about ranges, and we'll wrap tonight up here if this thing just bails, right, and runs lower. The one thing about ranges is the mindset of a trading range is rotation. So the way that ranges work is ranges are magnets, they're balanced markets, and they're going to want to rotate back and forth. Okay, want to rotate back and forth. Our job is to buy low, sell high, and basically trade the rotation. So one thing we talk about a lot in our trade room is if we see a range, it's failures at the edges and traps as it rotates. Failures at the edges and traps as it rotates. Now, what do I mean by that? Well, we've got some waiting to do because we got to see if we get a range here in the first place. But what I mean by that is that for example, as we break out, we look for failures. We look for buyers to come in and try to buy it and fail back into that trading range, right? As we go lower around the edges, right? Around the edges, we wait for a breakout. We wait for the sellers in this case to fail, right? And we trade it back up into that trading range. And remember, I have a whole section of our free trading classes dedicated to ranges and failure patterns, right? So obviously I'm keeping it simple right now, but think about the failure pattern we teach, right, in the free trading course. That, again, failures around the edges. Now, as the market rotates back and forth, we look for traps as it rotates. So we understand that it's going to want to rotate back and forth like this. As it's making its rotation, we look for the trap patterns, right? The trap setups. So as we're going higher, we're looking for higher high in price and a trap. We get up, buyers try and fail, right? As they rotate lower, we look for traps going lower. Okay, these are pretty simple patterns, but some folks have trouble kind of learning them. Remember, it's a higher high in price and a trap low going higher. It's a lower low in price and a trap low or trap high, right, going lower, right? So as we rotate back and forth, we look to trap the bears in with a failure. As we rotate higher, we look for the actual literal trap setup, right, as it rotates back higher. All right, that's kind of the key. And again, we'll be looking for a range somewhere there in the middle, right? So as we again, this will be all kind of the prerequisite of this. The assumption is there's a range here that develops overnight, right? So we're ranging out, we go up, we trap the buyers in, failure going lower. As we're going lower, we look for trap setups, right? I say trap the buyers in, but it's a failure pattern right off the high, that failure into a trap going lower. We take out the edges, right? Remember, short, right? Short off the high, profit targets at the side of that trading range. We roll lower. The bears come in. They try a couple times. We use a failure pattern to go higher, failure, and then traps as we go higher here. All right. So just keep that general strategy on your radar tomorrow if we end up seeing these ranges. One thing about ranges, never trust a breakout. Okay, never trust a breakout. The only time we trust a breakout is when I see a strong run, a pullback to the 21 moving average, hold the pullback, and jump. All right, which could happen tomorrow afternoon with Jay Powell, definitely possible. So if we do go sideways, don't trust breakouts. Wait for the breakout. Make sure they hold it and go. That'll be your breakout signal, right? If they don't, which they usually don't, we're going to run back up into that trading range. So failures at the edges, traps as it rotates. Now, on the S&P and the Nasdaq, final topic here for this evening is if we go lower. If we go lower right now, it's going to be very difficult here to sell. And the reason for that is because we have this very strong run going higher. And anytime we see a strong run like this, we expect a pullback and a retest. So if the market takes off to the downside, in all reality, we have all of this momentum, short-term momentum here for the buyers. If we start making our run lower, it's very difficult to short down here. The only way to sell short on this would be if we saw a very strong run down and we saw a bull trap, right? We'd have to get that strong move, that shallow pullback, that lower low, and we'd have to get a trap set up in here. Remember, trap patterns are the pattern we use to avoid buying high, or in this case, selling low. We have a very small window. We have we have to thread the needle on that one. That's very, very difficult to find that. Not impossible, but that is the pattern to look for as we go lower. Maybe very difficult to find it. What seems more likely in this scenario is if they do make that run going lower, this may end up being one of those two-legged pullbacks we've talked a lot about in last night's video. We may end up running below these lows. The bears may struggle to recruit more people down here. Remember, we have this way overextended 60-minute bear market right now. So unless something changes, again, we have to think there probably aren't going to be that many bears who want to sell low. And they may find themselves in situations like this where they get trapped and it squeezes the back higher here. Not to mention, again, we have that strong run here in the short term. So I'll be looking tomorrow to trap those bears in. If we can get those bears trying a couple times, let's trap them in. Let's use their stops and finish off that retest of that high. And as always, one of my favorite trades would be go back all the way to that low. Same idea, right? Same idea as we pull back, bears once, bears twice, and squeeze back up here. So if we do end up rolling lower here to that low, now it may end up running lower, giving those sellers the bear trap or the bull trap. And then as they take out those lows, right? 1, 2, failure. And remember, these failures off the lows like this, they oftentimes squeeze very strong. So as you rip higher, don't chase it higher. Look for those trap setups, right? As we go, right? There's on a faster time frame, this looks a lot better. This is a pretty high time frame right now, 1, 2. Then as we go, right, there's that trap that everybody wants in on, right? So 2 try failure, that trap as it to make its way back up into that area. So I like that idea as well. If we get that breakdown and we continue going lower tomorrow, that unfortunately is a little bit too much to cover in the video here tonight, but that's okay though. Tomorrow morning, we'll be in our trade room, right? We'll be trading this stuff together. So if we do get some curveballs, if we do get some stuff that we didn't anticipate or surprises us, or we simply don't have time to cover here in this video, we'll cover that tomorrow morning in our trade room. All right, guys? Fantastic day today. Finally getting some nice big moves here on both sides. guys now, tomorrow morning, Thursday morning, we got GDP tomorrow morning. Don't be late to our trade room. I can't think of any better way to learn to do this correctly than to come out and ask questions and trade along with me and do it with me tomorrow in our trade room. We open up at 8 o'clock Eastern time every morning with all the advanced members. I'll put all the important links in the description like I mentioned earlier. I'll put the free classes down there. I would definitely recommend you start with the free trading course first. That'd be a good foundation. Get you start moving in the right direction, that you're ready for trading with us in the trade room. And I'll put all the members links, all the trade room links, all the information you need in the description of the video. If you have any questions or if you have trouble getting access to the free classes or anything we talked about here tonight, don't be a stranger. We're always here. Megan and I are always here to help out. If you have any questions, you can use the telephone, use email, use live chat. We're always here. So definitely don't struggle too much out there. If you got questions about brokers or data or computer or the free classes, definitely don't be a stranger. You can reach out, and we're always here to answer questions. All right, guys? Great job today. It's been a great week so far. Another exciting day, I would assume, coming tomorrow. End of the month, end of the quarter. Should be some fireworks tomorrow. We'll see how the day goes tomorrow. Hopefully, I'll see you tomorrow, 8 o'clock Eastern time in our morning trade room. If not, come back tomorrow night. We'll get ready for the final day of September, the final day of the third quarter. We'll finish the week up tomorrow night on the next edition of our video newsletter. As always, guys, my name is Joseph. Thanks for watching. Be well. Be nice to each other out there. And you better be here tomorrow. All right, guys? Adios, amigos. Bye-bye for now.